Getting a loan for college sounds like the worst kind of paperwork nightmare. Confusing, stressful, and full of fine print nobody warned you about. But once you get a feel for how it works, it's not that deep. Most of the fear comes from just not knowing where to start. So, today I'm breaking it down for you and comparing two of the biggest names in student loans, College Ave and Sallie Mae. Whether you're fresh out of high school, halfway through college, or a parent trying to make sense of all the options, this is everything you need to know to figure out which of these two lenders might actually work for you. And just so we're clear up front, I'm an affiliate of a lot of companies, and this is no different for today's video. However, I always try to give you my honest take because if I just told you what they wanted to hear, there'd be no point in watching this. My recommendations are always trying to help you guys, otherwise none of this matters. So let's start with College Ave. They're a private online lender that doesn't lend you money directly. They work with partner banks to arrange loans on your behalf. And they're honestly one of the easiest student loan platforms to use. One thing I like right off the bat is that you can pre-qualify without hurting your credit score. They do a soft credit check, show you what rates you might actually qualify for, and only do a hard credit check if you decide to move forward. Not every lender offers that, and it's a big deal if you're comparing rates. Once you fill in your info, you'll see your offers right there on the site. And if something looks good, you can go through the formal application from there. The site also has tons of useful info tools for finding scholarships, loan calculators, and refinancing info. It's designed for people who aren't financial experts, which is kind of the whole point. Loan amounts start as low as $1,000 and go all the way up to the full cost of attendance your school certifies. That includes tuition, housing, books, and everything else college throws at you. College Ave also offers refinancing if you already have student loans and want to consolidate or lower your rates. Now, when it comes to interest, you get to choose between fixed and variable rates. A fixed rate stays the same throughout the life of the loan, super stable and predictable, great for budgeting and planning. College Ave's fixed rates start at around 2.95%. Variable rates, on the other hand, start at about 4.24% and can fluctuate depending on the market. You might save money early on, but the risk is that your rate could jump over time. If you plan to pay it off fast, that might not matter, but for longer repayment terms, fixed is probably safer. To qualify, you need to be at least 16, have a social security number, and be enrolled in an eligible school. Undergrads and international students will usually need a co-signer, which is someone with decent credit to back you up. Once you're pre-qualified and pick a loan, College Ave verifies your enrollment, checks that the amount matches what your school allows, and sends the money straight to the school. College Ave also encourages you to make early payments. Their loans are designed to help you pay off your debt faster, and they make it easy to start chipping away while you're still studying. But one thing to watch out for is while their rates start low, their maximum rates are among the highest in the industry, going up to 17.99%. So if you don't qualify for the best terms, you could end up with a pretty steep rates. Now, let's talk about Sallie Mae. Sallie Mae is basically the OG of student loans. They started as a federal lender in the 1970s and eventually became a private company. These days, they offer loans for undergrad, grad school, part-time students, international students, and even trade or technical school programs. Unlike College Ave, Sallie Mae doesn't let you pre-qualify, so applying means taking a hit to your credit score right away, which isn't ideal if you're shopping around. That said, their application process is still pretty simple. You enter your personal details, what school you're attending, which semesters you need funding for, and how much you need based on your school's official cost of attendance. And like College Ave, they'll verify everything, including scholarships and grants you already have. If your credit isn't great or you don't have any credit yet, you'll probably need a cosigner. Having one can help you qualify and possibly get you a lower interest rate. They'll also need to provide proof of income, rents, or mortgage details, and other financial information. So make sure they know what they're signing up for. Once everything's submitted, Sallie Mae will give you a loan disclosure showing your interest rates, terms, and repayment plan options. If you accept, the funds go straight to your school. And just a quick heads up, if you guys do end up applying for a loan with either of them, check out the link I left in the description below. Using those might get you a small discount or a better deal than you'd get by going straight through their site. Doesn't cost you anything extra, and it helps out the channel too. Now, in terms of repayment, you get 3 options. Pay just the interest rate while you're in school, pay $25 a month, or defer everything until 6 months after you leave school. Same advice as before. If you can afford to pay a bit while you're still studying, do it. It'll save you a ton down the road. Long terms with Sallie Mae are a little less flexible. For undergrad and career training loans, you're looking at 10 to 15 years. Grad school loans are 15 years. Medical and dental school loans can go up to 20. You can borrow a minimum of $1,000 up to the full certified cost of attendance, and they charge a standard $25 late fee if you miss a payment. Now let's compare rates. Fixed rates for Sallie Mae undergrad loans also start at 2.99%, just like College Ave, but their max rate is slightly lower at 17.49%. Their variable rates start a bit higher at 4.37%, but again, the cap is lower at 16.99 compared to College Ave's 17.99. So if you land somewhere in the middle of that spectrum, Sallie Mae could actually end up being cheaper over the life of the loan. Both College Ave and Sallie Mae have their strengths. College Ave gives you more flexibility, especially with their pre-qualification process. Sallie Mae is a little more old school, but still super reliable, and their maximum rates are slightly more forgiving. At the end of the day, it all comes down to what you need, how much you want to borrow, whether you've got a co-signer, how fast you plan to pay it off, and what kind of rate you can lock in. If you found this video helpful, guys, drop a like, subscribe for more, and leave your questions down below. I'll try to get back to everyone as fast as I can. And also, don't forget about those deals and discounts that you can grab yourselves if you use the links in the description. No guarantees, but it's worth giving a look-see. Thanks for watching as always, and good luck with your loan hunting, and I'll see you in the next one.